Hi, and welcome to the 2021 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Monday, May 3rd, 2021 edition. Please be sure to hit that subscribe button for the latest 100% true financial news for you and your family. And I appreciate all of you guys' support today. Today, we're going to talk about the meetings that we've been seeing. We know we had the earnings report, and Warren Buffett today had a big meeting with Berkshire Hathaway. He came down on the media report and was saying that he sees very substantial inflation and rising prices. He says we're seeing very significant inflation, Warren Buffett said at the conglomerate's annual shareholder meeting on Saturday. We are raising prices. People are raising prices to us, and it's being accepted. As you know, Berkshire Hathaway owns one of the nation's largest home builders, Clayton Homes, along with companies such as Benjamin Moore Paints and Shaw Flooring. Inflation has begun to accelerate recently due to multiple factors, including increasing demand and struggles with some areas of the supply chain that we talked about earlier in our videos, as well as just easier comparisons with the pace a year ago. No mention of the money printing, the $2.2 trillion money printing that is happening right now between the stimulus and the infrastructure and everything else. That also leads to inflation because it devalues the US dollar currency, as you know. As you know, gold went up today about $24 as a result of all this money printing. And so they can see forecasters are continuing rising in those assets along with the cryptos and everything else because we're in an inflationary bubble right now. That Fred Terrell and Jerome Powell says it's just temporary, but you and I know that it's not going to be temporary because of the amount of money printing that they're going to have to do to pay for all of this infrastructure, all of this America Jobs Act, America Families Act. It's just going to be a complete disaster by the time 2023, 2024 rolls around. And after the midterms, and the Democrats are going to be basically voted out, and then there's going to be a whole battle with that. But that's a different video for a different day. But at this time, the costs are going up. Steel costs are going up. Copper cost is going up. Lumber cost is going up. And inflation is just beginning to accelerate. Now, the headline number that they say the core personal inflation is around 2.4%. We know that it is triple that amount right now. Real inflation is at 6 to 8% right now and rising. I don't have to tell you guys, gas in some places already above $3 a gallon, and we're not even in the peak of summertime yet after Labor Day, traditionally when the prices really rise. In California, prices are already topping $4.55 a gallon in some of the cities in north of San Diego and north of LA and downtown LA area. Ladies and gentlemen, I don't have to tell you that the utility bills that Texans faced from the deep freeze in the wintertime has increased their cost of electricity, and other costs are going to be passed along as a result of the supply chain breakdown, which is not going to be solved in 1 or 2 years. This is going to be a 5-year breakdown. Energy prices rose 1.8% in March, the fastest pace since February 2020. And so when we continue to see civil unrest on the streets, shootings between police and civilians, and vice versa, civilians killing police, ambushing police. I think there was one in the North Mountains of North Carolina 2 weeks ago. There's just a lot going on because people are getting desperate. They're worried that another stimulus check is not coming, as we know now, and most of the top 1% and other people are just going to be absorbing this money that they're getting off the top. Higher price pressures could weigh on stocks as inflation erodes the value of future company profits. Well, there hasn't been a fundamentally sound economy since 2008. Since 2004, really. But 2008 is when we said we left the fundamentals and went into this fairyland economy. As a result, Fred Williams says inflation to top 2% for the rest of the year, but decline after the economy is recovered. Well, the economy is not going to recover until 10 years from now. We're talking 2031. And so that's the problem with that. In addition to that, we have fraud, corruption. Under Armour agrees to pay SEC $9 million to settle charges of misleading investors. So we have these Ponzi scheme companies going in on the stock market. You heard of them. They call it SPACs. special project acquisition companies. They go in and, they don't have to declare themselves. We have all these zombie companies on Wall Street. 70% of companies on the S&P 500 don't actually turn a profit. They're not turning a profit. And so that means that we have a lot of zombie companies. We have a lot of zombie people walking around, not producing anything, but just waiting on the next stimulus check or waiting on the next thing to lift them up. And on top of that, we still have the border crisis, and we have to pay for all of that in addition to the money from the pandemic that we have to pay if there's variants or if we have to shut down again. As a matter of fact, there's some talk now that even though some states are reopening and others are kind of limiting the reopening, there's talk now that after the Memorial Day, sometime this summer between then and July the 4th, we could be experiencing another full lockdown if they don't get these variants under control, and if whatever happens in India spreads to some of the other parts of the world. So we have to be prepared for that, as well as we're going to see just tremendous things happening in this economy. This is going to be unexplained, and this is going to be totally disastrous. So the plan now is from the White House and President Biden is to just spend money. But that money has to be either paid back. It has to be paid back through high taxes that they're not talking about. That's high property taxes, corporate taxes, business taxes, capital gains taxes. And it has to be paid back by the families like you and I in a record time. And it's just not going to be enough money to go around. So in his plan, the White House is proposing to give $225 billion to child care. Families that pay a portion of their income based on a sliding scale. He also wants $225 billion for paid family leave, 12 weeks of FMLA. He wants child tax credits through 2025. Cost of the plan: the overall plan, $1.5 trillion in new spending, $800 billion in tax credits. The plan would increase capital gains tax to 39.6% from 20% for those earning over $1 million annually. And he wants to give the Internal Revenue Service an $80 billion funding boost with the aim of bettering the agency's fight against tax dodging against wealthy Americans. The administration estimates that this will raise about $700 billion in 10 years. That's not going to be enough. Right now, we have a $28.5 trillion deficit. So the math doesn't add up there at all. There's not going to be enough taxes raised in time to meet this demand. And this is why this depression is going to be absolutely unavoidable and absolutely catastrophic to the U.S. economy. Cities everywhere are going to go broke, counties, states. And that's why I tell you guys to get prepared, because they're already seeing that now. And they're going to cut services. They're going to cut police services, fire services, utilities. There may be rolling brownouts in some communities where you may have power for maybe, a couple of hours of the day. They may say, look, we got to cut back on water supplies. You may have power for, maybe 5 or 6 hours, and they cut down on the days that, or they may say you can only go to the grocery store if your last name is A through H. You go Monday, Wednesday, Friday. If you're L through Z, you go Tuesday, Thursday. It is coming to that. Remember, back in the Depression, they had rationing for food, water, utility. We're going back to that, but they're not going to call it rationing. They're going to call it something else, and they're going to make it like that. In some countries in Europe, they were doing that. Remember, in Italy, they were doing that. In Turkey, they were doing that when their currency collapsed. Certain days to go to the grocery store, certain days to go to the gas station, certain days to have recreation time. Otherwise, you stay in your house or you get fined $1,000 or even jail time. This is what they was coming to. As a matter of fact, I want to say this. I'm going to close with this one point. Today, on our local news, they said that the Wawa in the Northeast were actually trying to incentivize people to work there. They were giving people $500 bonus to work at Wawa, the convenience store that we have in the Northeast. And they were also giving you a $75 vaccine incentive. They said it wasn't mandatory you take the health crisis vaccine, but if you do, they'll give you a $75 per pay period for the first 6 months incentive to join. So, guys, now they're even incentivizing the vaccine. If you get the vaccine, now we're going to give you some extra money. So not only is some people getting unemployment, or maybe they want to find work for the 40 million people that's unemployed still in America, at the Wawa, you can go down there and get a $500 bonus, $75 per pay period if you take the vaccine. And this is what it's going to come to, ladies and gentlemen. They want total and complete, the upper 1% want total and complete control of your lives. And so the more self-sufficient you can become, the more you don't have to rely on saying, oh, I got to go down there and get a check. I have to take this. I have to take this, vaccine, or have to do this to get this money. And that's why it's so important to be self-sufficient on your own homestead, or learn these skills and come together as a community, so you won't be fighting like this in these communities, because fights are going to break out. And these fights that you see here are going to break out mostly when the food and water shuts down and when the commercial credit shuts down. Those are the two big things I look forward to seeing, and that's what's going to happen later on in this president's term, probably in the last year or two, 2023, 2024. That's when the rubber meets the road, because he will have spent all of the money that the U.S. Mint and the Federal Reserve Bank is willing to lend to him at this time through the infrastructure families plan and all this other stuff. So be prepared, stay prepared. I'll talk to you guys very soon. Thank you so much for listening. Please be sure to hit the subscribe button, and I'll see you in the next video.